The up in USD phenomenon is a phenomenon that the average crypto trader who goes on the markets is often subject to. The trader may experience bouts of nervousness, shaking, quivering hands, and may be eager to liquidate their positions. And when they liquidate their positions for a Bitcoin loss, they will say, well, I'm up in USD, so it was a good trade. If you or a loved one suffers from the up in USD phenomenon, please call the law offices of Roy Blackstone at 1-888-888-8888. So, the up in USD phenomenon. This is something that is that is pretty prevalent among traders, particularly in the trading community. I've seen it on crypto Twitter. I've seen it all over the place. I didn't see this so much in 2017, nor around the end of 2016 when I got into crypto, but it was something that started getting a lot of steam. I suppose it did. Towards late 2017, it did start getting a lot of steam, a lot of push behind this concept of it doesn't matter if you're losing Bitcoin as long as you're up in USD. As long as you're making the dollar, then you're doing all right. And I look at this as kind of this weird phenomenon because all it really takes is a little bit of thought and a little bit of logic applied to it to realize that this doesn't actually really hold water at all. It doesn't make sense. It's kind of weird. It puts you in this weird like mental gymnastics limbo where if as long as you're up in USD, you're a good trader. But that's simply not the case. And so I'll kind of move into that. So in general, the traders will say that they're up in USD. Let's say they purchase an asset, and let's say it's a crypto asset. It's an ERC20, and the ERC20 is $10. And over the course of a month, let's say this ERC20 raises in value by 15%. So now you've made 15% on your $10. Okay, great. You have $11.5. Awesome, right? The problem arises when people are comparing that to the Bitcoin value. So if Bitcoin was a certain value during that month, so during that month your alt went up 15%. Bitcoin during that same month, in this hypothetical example, went up 20%. Even though you've made 15% of USD profits, you have lost a certain percentage of, I don't know if it's 5%, I think it's less. You have lost a certain percentage of Bitcoin profits, which means that your alt was performing worse than Bitcoin during that month. Now, what people will often say is, well, I'm up in USD, therefore I did a good trade. And I think it's fallacious, and it's a very fallacious, and it's toxic to a trader, especially and their portfolio, particularly because it makes you lose a lot more money than you really think you are making at the end of the day. If you generate $15, but you could have made $20 just by holding the base asset being Bitcoin, you've lost $5 that you don't even really notice that you've lost. You've made 15 in your mind. You've made $15, right? And you say, "Well, I've made $15. I've done my job. I'm a great trader. I can go home. That's it, right?" That's what you would think. The reality is there's a lot of money left on the table because you weren't holding Bitcoin. So you've lost that extra $5. Now, what happens if this is $50? What happens if this is $500 or $5,000, so on and so forth? And then on top of that, what happens if you do this cumulatively over a large period of time? Is you keep short selling yourself in terms of what you could have made and only make the amount that your alts are essentially losing, basically, compared to Bitcoin. So it's very, very difficult for a lot of traders to think about. But if you think about it for more than 5 minutes, you will quickly realize that the up in USD thing is completely fallacious. So now there are different cycles of the market in which it makes more sense where you want to hold Bitcoin and where you want to hold USD. Clearly, you want to hold Bitcoin during bull markets whenever Bitcoin is in a bullish trend. Obviously, you want to hold USD whenever Bitcoin is in a bearish trend. So the up in USD phenomenon is something that I've seen only happen whenever crypto and Bitcoin is in a bullish trend. And funnily enough, I've seen the opposite happen when everything is in a bearish trend and people say, well, I'm up in Bitcoin at least. And it's also completely fallacious to say that. If Bitcoin, we can look at Bitcoin as the base asset of the crypto sphere, and we look at USD as the base asset of the non-crypto sphere, of the fiat sphere. So if you are in fiat, you're essentially shorting Bitcoin by 1x because you are hoping that Bitcoin goes down so that you can purchase it with your fiat, if that's what you're using your fiat for, if that's what you're trading for. And if you're in Bitcoin, obviously you're 1x short on USD. So that's the interplay between that. Now, if the bull market happens, the way that you follow the trend is by holding Bitcoin. So if Bitcoin goes from $1,000 to $20,000, that is, you can say that is the average that the crypto sphere has performed in that bull run. So anything above that means that you have generated alpha. You have done something, you have taken actions on specific altcoins, and those altcoins have outperformed Bitcoin. That means that on the altcoin Bitcoin pair on their charts, it has actually gone up during that bull run. So that's when we see things like Roblox, for example, going 10x on the Bitcoin chart, and Bitcoin also went 10x during that time. So actually, Roblox went 100x. So it's interesting. In that case, you have made 100x of your money. But if the inverse was true, if you were only for trading for USD and not for Bitcoin, and then your Roblox goes up 10x in USD, but actually it didn't do very much at all in Bitcoin, it just kind of stayed the same. It's almost as if you didn't make a trade at all. It's almost as if you didn't place a trade at all, and you probably would have been better served simply holding Bitcoin and having the security of holding Bitcoin. So if you want to generate alpha, and alpha is defined as essentially an edge, additional money that is created that is above the index, that is above the average, that is above the normal that most people can create. The normal in this case being Bitcoin, if you're long Bitcoin, and USD if you're short Bitcoin. So that is, in a bull market, you want to be up in Bitcoin, and that's really hard to do because Bitcoin is extremely explosive. Now in a bear market, you want to be up in USD because chances are that Bitcoin is tanking in its price, which means even if your alt stays the same in the Bitcoin value, it's losing USD value over time, which means you are losing, you're using your USD value. If you go up, if you go trade for USD during a bear market, that means that your asset is outperforming the Bitcoin pair in terms of how it's going down, and you're making your USD gains. So a 1x during a bear market in terms of, so let's look at ICOs. So if you invested in an ICO in a bear market and it goes 1x for USD, and I've seen a lot of traders actually get pretty happy about this because in a bear market, let's say Bitcoin was $20,000 and people invested in an ICO. Bitcoin was $20,000. Here's a certain peg for the amount of tokens you get, and Bitcoin drops to $2,000. It loses 10 times its value. On paper, you've also lost 10 times your value because you technically held that Bitcoin that you've now allocated towards a project. If that project now releases and you get your tokens and they are trading at 1x USD, which is 1x of the USD value that it was trading initially, then you essentially have reset your value back to that $20,000 Bitcoin value, and you have frozen your value at that exact point, which means you're usually making multiples on Bitcoin or Ethereum. So if Bitcoin was $20,000 or Ethereum was $10,000 and everything dumps, and you maintain 1x USD on that trade, that means you have probably made something like 10 or 15x on your Bitcoin or your Ethereum. Likewise, it's the opposite where you are when you are in a bull market. If you go up just 1x in Bitcoin during a crypto bull market, chances are that you probably made many multiples in USD. So, wrapping everything up in USD phenomenon, it is something that affects traders, and I do find it fallacious. When Bitcoin is bullish, you always want to trade for additional Bitcoin. It makes more sense for you to trade additional Bitcoin. If you are only trading for USD, just hold Bitcoin. If you are in a bear market, you want to be trading for USD because trading for Bitcoin is probably not going to give you the amount of edge that you're looking for, because you are now combating the amount of USD loss that Bitcoin is receiving. So and the final point is, I've seen charts have been made around this that look at USD values, pure USD values, mapped out across time compared to the Bitcoin value. And Most of those, and the chart is really kind of a jumbled mess, and the chart goes from 0 to I think 10x in terms of returns, or 100x, or I think it was 100x. And so here's what the chart looks like, and here it is. Bitcoin is like right here. Bitcoin is like right here where it goes up, 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 up. I would say 70% of alts are down here. 70% of alts are underperforming Bitcoin, and so maybe they go up for a little bit, but then they go down, and then they go down, and then they go down, or maybe they go down and they never come up. I've seen a lot of those are like that, where they start here, they start with that nice U at 1x BTC, and then they go down. And some of them rarely will go up and up and up and up, and we'll see. I would say about 5 to 10% of altcoins will go up against USD during a bull market. So even during a bull market, it's very, very difficult to outperform Bitcoin, given the altcoin ecosystem and what traders are doing at the time. You can make short-term gains. You can capitalize on short-term news, events, hype, so on and so forth, market dynamics, market forces. But on a long-term basis, the longer you hold your altcoin, the lower chance you have of actually maintaining that 1x USD, the 1x performance with Bitcoin, that 1-to-1, where if Bitcoin goes up 10%, then your alt can also rise 10%. That gets harder and harder and harder the longer you hold your asset. So if you are more of a long-term altcoin investor, you have to be very careful of what you are actually investing in, because only a few projects to date have really been able to outperform Bitcoin. So that's really all I had to say. Let me know if you guys enjoyed that video. Subscribe if you want to see more, and I will see you guys next time.